Welcome to Concrete Conversations, the Indian real estate podcast. I'm Akshay.
And I'm Yash, and we're the hosts of the show. Over the last decade, the infusion of foreign capital has changed the landscape of Indian real estate, with almost $24 billion being invested between 2017 and 2021 alone.
But why the interest in real estate in India? How do these multinational corporations evaluate what projects to get involved in? And how can foreign capital shape the future of this industry?
To give us insight into the private equity landscape for Indian real estate, we have with us today Mr. Avinash Sule, Managing Director of Investment Management at RMZ Corp, one of India's largest private developers.
Mr. Sule has an extensive background in private equity and investments, having worked with Meryl Lynch and the Qatar Investment Authority, and also consulted with foreign developers on large investment deals in this industry.
So get ready to invest your time in a conversation that will yield some incredible insights about private equity investment in Indian real estate.
Avinash, welcome to Concrete Conversations. How are you doing? How is your morning going so far?
Thank you, Akshay and Yash. Excited to be here. So far, so good. Bright morning in Mumbai, so excited to get going.
Glad to hear that. We're excited to get going as well. I thought before we dive into the heart of the conversation, we could start by learning about your story and about how you ended up in real estate. So could you maybe give us and our listeners a little bit of a career overview?
Sure. Yeah. So, like always, I think real estate gets people from all backgrounds and have different ways to get there.
Right.
So my journey started off as an equity analyst.
Mm-hmm.
So nothing to do with real estate. I was a equity analyst at Meryl Lynch. And after that, I joined QIA, which is the Qatar Investment Authority,
Right.
a sovereign fund out of Qatar. They hired me to do global equities, and I was working with them in Doha.
Okay.
I was doing Indian equities as well as global. And my real estate team there was looking at India from a real estate investment perspective. And this was 2005 and 6, the heydays of FDI regulation opening in India. So they started looking at that space, and they just pulled me in saying, hey, you're Indian. We have this Indian company coming along. Why don't you just sit in? And I said, I have no idea on real estate, please. So my head of real estate then said, you'll figure it out. You're a smart guy, but why don't you come give us some, overview on, so that we're not stepping on the wrong path.
Right.
Mm-hmm.
So that's how I joined them.
Wow.
And looking at real estate investments. And that journey, was a long one. This started in 2006-7, and I quit QI in 2018.
Okay.
So it was a long journey with them. And through that cycle, I invested in companies like RMZ. We started a debt platform along with Kotak, and we invested in several real estate funds in India. So my learning was through a lot of the early investments in real estate from global investors. We were partners there in the 2006-7 period.
Right.
After that, after I quit QIA, I was an advisor to a large Japanese listed real estate developer who wanted to enter India, and they sought my guidance on their entry strategy and the investments that they were going to make.
Wow.
So I advised them for 2 years, and I advised another US-based private equity fund called Jaguar Growth Partners with their Asia strategy as well. So I was guiding them with their foray into Asia. And just last year, I went back to RMZ, which was my former investee company.
Right.
I joined them, and it's been a very exciting journey since then, which I'll talk to you through later. So yeah, that's been my story.
No, and it's very interesting to me that you said that you started out in about 2005-6 is when you started looking at real estate from an investment perspective, and you've basically seen the entire cycle, right, of, as you said, FDI regulations opening up back then and foreign investment first coming into the space to where we are today with a relatively more mature ecosystem with REITs having been deployed in India. So I thought that it would be interesting to ask you, since you have that kind of long-term perspective here, what has been the sort of history of foreign investments flowing into Indian real estate over time?
Oh God, how many hours do you have, right? uh, so it's been a very I'd say uh, an up and down cycle for foreign capital coming into India. But the one theme that's remained always has been the Indian consumer. See, the foreign investors have always seen that the Indian market and the Indian consumer requires and needs global standards of real estate, and hence they keep coming again and again, right? So the way it started in 2005, 6, right, when the FDI opened. There wasn't any institutional real estate in India, right? They were all local partners, local developers who were very insular. And I think global capital looked at it and said, well, there's a lot of value we can add by giving some inputs from the learnings globally. And that's how they came in. A lot of funds got set up. The private equity funds got set up to help provide capital as well as growth to the local developers. And that cycle, as we all know, a lot of excesses in any cycle happens. In 2006-7 was the heydays in India, right? People were still figuring out the rules, figuring out how to get it done, and I think it was too much too soon. So there were a lot of calls that were taken by groups that were a little aggressive. And now looking back, we can say that, but at that time, it didn't seem as much, right? It seems like things would go on forever. So people obviously got adventurous, and a lot of partners, as in developers, funds, got stuck.
Right.
And that was the first cycle, and that was, I'd almost say 2007-8 is when that ended.
Right.
When you had a lot of funds, the foreign funds realized that this money that they've deployed into India hasn't gone in appropriately and may or may not come back. So they got a little jittery.
Right.
And like any other sector, right? Execution is key. I mean, people keep giving real estate a bad name, but I think real estate is like any other industry where if you execute, you perform, you do well. So even through that cycle, there were many funds and many developers who did well, right? And who survived and who've grown through that cycle.
Right.
So it gets all, brushed the same color saying, oh, real estate went through a downturn, but it didn't. There were many guys who performed and delivered.
Right. Right.
So you saw that cycle where after that 2007-8 cycle, there was a consolidation phase in the 2008 to almost 2010 to 12, right? There was a consolidation. Few, the guys who were well capitalized, who were doing simple things right, continued to grow. And you saw a lot of governance come into the system. A lot of the banks also who had lent, started pulling up the partners saying you haven't done right, and they started pulling their socks up, right? So you saw the entire ecosystem start getting up and realizing that if we're able to deliver, right, there is a return to make. So a lot of new investors and new property companies got created in that cycle who started growing their businesses, be it residential, be it office, and got across the country too.
Right.
Right. And then came the last cycle, which is since the 2014-15, where, Indian real estate, the emergence of Indian real estate as a proper industry, where companies have grown from, leaps and bounds. You have, the largest companies you see are Prestige, Godrej, etc., have done so well. And so have the office companies like RMZ, Embassy, so many others like K. Raheja. They've done so well through the REITs. So I think all these companies, the larger companies, went through these cycles and consolidated, learned, and just focused on execution. And that's why you've seen the sector now come up and become one of the largest sectors in the country.
Right. And I think this is, you've set us up for several and really interesting angles here when we talk about real estate investments in India. But I wanted to take it back to something you said earlier on when you were talking about, how you started working in real estate in India. And I had a bit of a follow-up there with regards to the advisory roles you said you had with certain companies that were looking to maybe enter India as a market.
Mm-hmm.
This might set up a bit of the context for the discussion later on, but I just wanted to ask you, did they end up entering India? And if they did not, what were some of the challenges that maybe they faced or you faced while working together to enter the market that maybe there were obstacles at the time and have since changed, or those are obstacles that still you think the industry needs to address?
Sure. No, I think that's a great question, and it's a very important one also for your listeners. So there were two advisory roles that I had. One is the Japanese partner, as I mentioned. So that did culminate into a large investment into India. They made their first foray. It took them a while to understand it, but they did make the investment. And so let me explain that a little bit, and then I'll go to the second one. Um, the Japanese as a industry, as a company, as a country, and as a group, they invest for the long term. They take their time to do their research, and that's exactly what happened with the partner that I worked with.
Right.
They spent almost a year and a half on researching and understanding the ground realities. They made several trips into the country with all sorts of groups from there within their company, so that everyone could understand the different nuances within India. And I think that level of hard work and understanding of the market is what is required for anyone to make a long-term investment in India, and which is why after that entire deep sort of understanding of the market, they made that large investment, and it's been so far successful for them. The second investor, which was Jaguar, as I mentioned, they are a private equity fund. They were looking at Asia and actually are still. The India investment did not happen at that time, in that period, when I was advising them. And that had several reasons. One was COVID hit. We started off on the India fundraise and Asia fundraise, and India particularly was a lot of interest to investors. But as COVID hit, travel shut down, it became very difficult to get new investors to look at India. And
Right.
I think through COVID, a lot of investors who were not on the ground in India, who had not seen the market clearly, faced the same issue, right? Where, as I mentioned earlier, the Japanese, they spent a lot of time on the ground. Unless you do that, it's very hard to get new investors to sign up for investing in India, right? And that's one of the key learnings and key guidance for anybody who's looking to invest into India is you have to spend time on the ground. And if you don't do that, it's going to be very difficult for the investing team to convince their investment committee or their boards or their senior management on why they should take that call, right? Commitment comes only with conviction, and conviction comes only when you spend time on doing the work. So that's, I think, the journey of different types of investors, where without that hard work, it's very, very difficult.
That makes sense. That definitely makes sense. And just a quick follow up here.
Sure.
When you are on the ground with an investor, and now we're talking even more in general terms, of course, you have experience with a Japanese investor, but for private equity in general, a company comes into India, they're a foreign company, they have huge capital, they're looking for a growing market, and they say they want to do some groundwork, they want to understand the market. What are the criteria? What are the the touch points that you look to evaluate in a market like India, which, I mean, within itself is so diverse depending on which city you pick? How do you go about evaluating the structure of which markets to invest in, which asset classes to invest in, and so on and so forth?
Sure. So, I mean, at QIA for 12 years, that's all I did, right?
Right.
Every day was exploring a new investment and a new market or a new entrepreneur. And the key things there are, you have to first meet the company in question, right? That's obvious. But you have to learn what works for that industry. So for real estate, what would happen is we would definitely explore working with, the local advisors. There are a lot of, international consultants who work on the ground, who have large teams, who know the market better than others because they're constantly doing it. So we'd meet multiple of them to get their perspectives first. Then we'd also meet other companies, be it larger, be it smaller. So we'd meet, if I was meeting a company that's, say, size 10, but I'd also meet a company that's size 1 and a company that's size 100.
Right.
Right? To give you a perspective, to understand what each one's doing in that industry. So we would spend a lot of time with the others to see if what the company in question is sort of telling us or guiding us towards stacks up,
Right.
right? And then like a market like India, right? The addressable opportunity is always huge, but you have to peel the onion a little bit to see, is that real? Are you being naive in saying, billion people? Everyone says, oh, India has a billion people, the market's big. But, if you're selling residential in one part of Mumbai, right? Doesn't matter if there are a billion people. You're only concerned with that locality, right? Are you building a product for that locality? So that's the kind of thing that we would spend a lot of time to understand, rather than getting driven by the macro number.
Right. And just kind of following up on that, as
Hmm.
you said, it's not just about showing them the scope of the opportunity. It has to go a little bit deeper than that when evaluating these opportunities. So I based on that, I wanted to ask you, over time, what
Hmm.
has been the draw of Indian real estate markets? Is it more of an emerging market play, or has it been that since other Asia Pacific markets are established, funds turned their thoughts towards India? And how did that process kind of come about? Did they have specific criteria in terms of yield or long term growth that they were looking at?
Sure. So I think that's a great question, because that's a common one for most funds when they're looking at investors. And you always got to remember the key criteria for any investor's return, right? Yes, emerging markets are exciting and they want to explore it. But if the returns don't match up, nobody would come.
Right.
So the key criteria has to be return. And when I say return is, you have different types of investors, but to generalize, an investor would look at, just to say, okay, what is the bond yield in a country, right? Add a risk premium to that,
Right. Right.
right? And then you put the currency depreciation, and immediately in India, you're looking at a mid-teens is the minimum return you would expect.
Right.
Then
Right.
beyond that, it depends on the type of fund. A private equity fund would probably need to make a 20+% return, because there's fees and there's carry, etc.
Yeah.
And they got to look back to the investors and give a return that's commensurate with the risk they're taking. Other long-term type investors would obviously see it differently and could take much longer-term calls and uh, look at different return thresholds. But in general, I think 18's return is the minimum anybody would look at India for any asset class.
Right. I think given the bond yields in the US right now, a lot of analysts might be looking at that with an emerging market lens in the last couple of months or so.
And it's increased, and that's very valid points. You see, a few years ago when you had bond deals at globally they were at 0%, etc. Right?
Yeah.
It was obvious that you look at a market like India, right, would give you that a better return than what you would back home.
Right.
So yes, there was a lot of interest, and there continues to be in India. But you mentioned this, Yash, earlier. Growth is critical,
Right.
right? They're all looking at India because of growth. So if there's growth, there will be a return to be made,
Right.
right? So you put both those things together, and that's what makes India a very, very interesting destination for most global investors to look at.
Perfect. And I think this point flows perfectly into the next question I had in mind,
Mm-hmm.
which was that, we've seen commercial and especially large ticket size office parks being an entry point for a lot of, foreign funds into India.
Mm-hmm.
And I wanted to ask you, how did that kind of choice come about? Was it a function of, something that could be done at scale, which still met the return criteria? Was it a question of, safety of investment for a new fund coming in?
Sure. So I think it was a culmination of a lot of these things. So it's not just one answer.
Right.
So I mean, to pick on your point, yield is the most critical element, right? They want stable yield. If you're, to our earlier discussion, if you are a global investor whose home market gives you a 1 to 2% or 3% yield, and in India you're getting a much higher number, so that's what attracts. That's the first attraction. The second thing is, it office gives you a long-term cash flow and a long, stable investment. If you invest in residential and you're seeking yield, you're going to get your money back. In India, the money comes back much sooner, because
Right.
if you build a good product, investors or rather the customers come and buy the product quickly, and you're out of the project.
Right.
That's why office looks very different. So it's not like all investors wanted to do only office. It's the type of investor. So if you split that up, right, if a private equity investor loves residential because, the money goes in, you make a return, you come back out, exits easy. On a guy who's looking for long-term investments, says, I don't need the money back. I want to keep the money in India and let it grow, right, for my long-term investor shareholders. So I'd look at something that gives me that long-term stability, and hence office got attractive.
Right.
Now, other than that, office also was a lot more organized, and you mentioned scale, and that was very important, right? If someone wants to put a few $100 million in one investment, they can do that in office.
Right.
In residential, now, of course, the larger developers, there's a lot they can do. But if you look at it 5 to 7 years ago, it wasn't that easy to find large investments in residential relative to office. So stability, long-term, and organized, right? Office players were all catering to multinational tenants, so you could see the leases, you understood the leases, you were reading things that you would in any part of the world. You didn't have to understand the nuances of, as I mentioned earlier, a local market, what the customer preferences are locally. You didn't have to do that kind of work. You could understand this asset class from a global perspective and invest in India too.
Right.
So that's why it started off as a larger asset class.
Right. I think that makes sense. And you mentioned something about stability over a long term. I wanted to ask you, I'm going to push you a little bit here, Avinash, to give us the
Sure.
nitty-gritty details. But
Sure.
I'm going to ask you, when you say long-term, can you define to us, because for each industry and each investment and each asset class is different.
Right.
What is the investment terms typically that funds would look at for Indian real estate investments across different asset classes?
Sure. So a private equity investor obviously needs a 3 to 5 year horizon, right? Because their funds have a life of 7 to 9 years. They need to provide an exit. So they would look at a 3 to 5 year or maybe even a 7 year horizon maximum, right? However, a larger, say a pension, a sovereign can look beyond that as well. And that's where the long-term play comes in. So they could look at an investment that could sit for more than a decade. Right? They could potentially.
Right.
And that's how the asset, as an office, if you're getting into a large office development, right? You have a tenant who takes a 9-year lease, 3+3+3, and sometimes even 15-year leases.
Right.
So those are long-term leases. You know the cash flow for that period, and hence you can match your investment with that sort of stable income.
Right.
So the larger pensions and sovereigns would look at that sort of time horizon. However, mind you, all of them also have the requirement that the asset or the investment has to be liquid. So they could, at any point in time, based on their capital requirements, need to exit. And hence, you mentioned this, Yash, earlier, the REITs. That's why the emergence of REITs. It's a very deep industry, and globally it's very prevalent, where large investors require REITs to be there so that they can exit their positions as and when required.
Right.
It just gives more options for liquidity. Not to say that in India, the private market has actually been a very, very active market when it comes to the office asset class,
Right.
and it's provided enough exits to investors too. But I'm just generalizing when I say REITs here.
Right. But that's very interesting, because REITs is a big development in the Indian real estate industry, and it's something that we wanted to get your perspective on as well. When we talk about these timelines, what do you think the transition was like from foreign companies going from maybe a project finance or equity in real estate companies investment phase into a long-term thought process that involved, okay, maybe we should set up REITs here, because you have the likes of Blackstone that have very long-term and long horizon, involvements when it comes to even setting up these REITs.
Right. So I think, I could give you a perspective, but obviously I'm not an authority on REITs. But
Right.
my simple answer to that is, REITs are another avenue or another option for an investor. So in any industry, you got to have a private option and a public option. Right. So REITs provide the liquidity to an investor if they need to exit, or they need to have an option to exit, as I mentioned earlier. So REITs provide that. Now, what it also does, and that's, I think, the bigger one globally and even in India, is REITs provides an option for individual small investors and medium-sized investors to get into the play of stable long-term real estate, which otherwise you don't get an option to, right? If you wanted as an individual to buy real estate, say 5 years ago, all you could do was either buy a small office if you had that sort of capital, or buy into a listed stock of a developer, which is who does residential.
Right.
There were very few who were doing office only.
Right.
Now, REITs as an asset class, as I mentioned, gives you that long-term stability of cash flow. That asset class people can now diversify into. So in your personal portfolio, if you have equity investments for other industries, you can now have a stable longer term cash flow investment from in REITs. And that's how internationally too, that's where the depth of the REIT industry has got created.
Right. I think that makes a lot of sense, especially when you talk about the diversification of an individual portfolio. That's something in the US here. We get to see a lot of REITs in a variety of asset classes. Obviously, in India, it's still a very nascent industry. One of the things that obviously that we've talked about with REITs and even with the initial stages of private equity entering India. Is the partnerships between the fund and then the developers.
Mm-hmm.
What are some of the advantages for developers in India when it comes to working with foreign funds? And also, are there any things that developers in India should be aware of before they get into partnerships with foreign funds?
Sure. So, I mean, that's for my entire career. That's all I've been doing, right? Partnering with Indian groups. And I think there's a lot of benefit for in Indian developers when they sign up with foreign funds.
Right.
The first thing is the perspective. The foreign fund has a much broader perspective. So the learning, right? If it is a true partnership, the Indian partner learns so much from their global investor
Right.
on what's happening elsewhere in the world. Of course, you can read every journal about what the global trends in real estate are, but when your partner's telling you their investments and their experience, right? That's a great learning. Secondly, investors bring governance and reporting requirements, which otherwise you wouldn't focus on. And it's so important because as our companies in the real estate sector grow, you want them to become so the companies that have a standard that's matched to anywhere else in the world.
Right.
So I think that perspective and that experience and learning is very, very important for local companies when they talk to global funds and global partners. And another key part is the cash flow prudence. I think investors always help the local partner, be a little grounded and understand, keep the realities in check and make sure they understand the importance of managing their cash flows. Because, as an entrepreneur, of course, you're always pushing to go beyond your limits and trying to grow aggressively, and rightfully so. And I think hence you need a balance of a global investor who's seen it several times, gives the perspective that, hey, these risks are worth taking and these aren't. Let's be prudent. So I think it's a balancing act, which I think is very, very important as our industry matures and grows.
Right. And Avinash, don't hate me for asking you this, but I'm going to flip the question on its head now and say, since you've worked with so many funds to bring them into India, is there anything that any of these funds or you through your process have learned from the Indian market, which you've taken out of India and said, oh, this is a learning that, looking at India in juxtaposition against all these other foreign markets is something we've learned and we could take this out of here and apply it elsewhere?
Oh, yes. The key thing is never say no and, never-ending spirit. I think the Indian entrepreneurs are always open to ideas and learnings. That's fantastic. I mean, it's not the same when we go to some other global partners, right? They may or may not want to listen to. They say we know the market. In India,
Right.
Every partner I've ever worked with is always open, saying, "Hey, this is great. Can you teach me? Can you show me? Can you take me there? I want to see. I want to learn." So that's something that's fantastic. Energy.
Right.
And so when we go back to other groups elsewhere in the world, we say, hey, these guys, just see the energy that they have, right? The entrepreneurs, the individuals it's not the money, they've made enough, but yet they want to grow because the hunger. And then that is what we try and export to others, saying, let's learn the hunger and the growth story from India.
Right. And I'm sure Indian developers would be very happy with the much lower cost of capital that they're presented with also when working with foreign funds.
Well, that's a different topic altogether. It's a tough negotiation, but yes.
Right. Moving on, we spoke about the kind of setup and the process of all these fund flows into Indian real estate,
Hmm.
and we spoke about commercial being, kind of the dominant asset class, at least at the start of this whole process.
Yeah.
So, looking at the trends today, what would you say are the next verticals or the current trends when it comes to private equity or foreign investment in Indian real estate? I know that, warehousing and logistics is a hot market now. Are there any other subsectors that come to mind?
Yeah. So, I mean, you mentioned the logistics and warehousing is right now the number one priority for global investors as well as domestic developers. So like we at RMZ as well, pushing this industry because we believe there is a big need, right?
Right,
And it's not just an asset class as suddenly that's emerged. If you're seeing the global trends of where Amazon and Flipkarts and all of those are growing,
right,
just to cater to that customer, there is a big need. So that industry is growing very, very fast, and there will be offshoots of that industry first, and then there are alternatives. So many other asset classes like multifamily housing. You've had the industry come and go in the start, but I think the law is getting sort of developed as we speak at the center and at the state. So I think that will help. So that industry will grow. There has to be a big organized industry for rental housing, right? Right now, students, be it young workers, all of them, when you go to rent an apartment, right, it's very unorganized. So I think that sector will emerge.
We released an episode with a company who's trying to sort of organize the student housing sector as well. Sorry to interrupt
Right?
you, but
No, but that's right. And you're seeing that come in, right? You're seeing that those kind of entrepreneurs and companies getting created.
yeah,
And similarly, you've seen this thing in in staying. You've seen Oyo and now many other companies like that getting created for rental housing from a vacation or hotel stay.
yeah,
So I think those spaces, those alternatives will grow, and then there will also be, we've seen REITs in commercial real estate. Now you will see REITs from logistics, you will see REITs in other asset classes, which give the same formula, i.e., that's long-term yield or long-term cash flow with a stable tenant. I think those assets will also come into the market as REITs. So you'll see that broaden a little bit.
absolutely. I think that's something that a lot of players in the industry are eagerly looking forward to and waiting for the day when even residential REITs become a big thing, because residential supply is a there's a huge demand for residential real estate and something that's going to keep growing.
Right. So residential REITs will take some time because of the regulation that will, come in first, and then you'll see the REITs.
right.
But I was talking about asset classes like, I know someone we know is going to launch the first InvIT for educational assets,
Oh, wow.
right? So that's going to come soon. They're going to file, I think, in the near future. And then, so asset classes like that, you'll see why not hospitals, right? Hospitals also can eventually come. At QIA, we had tried that several times in India,
Right.
but the market is now deep enough. So I think it'll come.
Right. Taking a step back over here, Avinash, from more bird's eye view, there's, I mean, we touched basically a little bit on COVID, pre-COVID investments, and how there's been different phases of private equity investment in India. The obvious question is, with the amount of uncertainty that we've seen over the world in just the last 2.5, 3 years, do you think this will impact the trajectory in which private equity funds are investing in India, or you think India will stand strong even in the tough tides?
I'd sort of, I've been saying this to everyone. I look back to the 2009-10 era, just after the GFC, right?
Right.
The globe went through a recession. A lot of companies globally saw this problem, saw financing issues, etc., and the growth had curtailed. However, India continued to grow, and hence investors saw that, and investors who were willing to take that call came in that cycle and made some really handsome returns.
Right.
So some of the larger foreign funds we mentioned earlier, right? They made their first large investments in that cycle.
Right.
So it's like any other investment cycle, right? You have your highs and lows, and based on valuations. And I think in India, where we will see that in that cycle, it's investors who are willing to take the call on India's growth, right, are the ones who will make a return. So I don't believe there will be investors who will not come into India or rather will pull back, because the growth here continues,
Right.
right? Our population, the economy, different sectors that real estate caters to continue to grow.
Right.
So if that happens, I don't see a reason why investors will not come into this sector.
That makes sense.
Right. And just as a follow up on that, you spoke about post the environment post GFC, and I know that this might be a little off topic, but I just wanted to get your thoughts on this since you have so much perspective on this subject. Where we spoke about economic uncertainty, but we're also seeing, as we said earlier, bond yields are up and markets are a little, let's say tentative right now. So, what do you see as the outlook over the next, 5 or 10 years, or even the next 3 years when it comes to foreign investments? Do you think that we're going to reach a kind of plateau here as the market matures, or do you think that this journey has just started in India?
Guys, first of all, I don't have that much of expertise to give you that long a view on
Right.
what investors will do. But my simple understanding is this, right? Investors look at real estate as a service provider, right? Real estate, or from the office perspective, we are nothing but service providers to the industries that are the tenants, and be it, and on residential, it's what the consumer is doing, right? Do you have money to buy a house, and are you growing, as is there job growth happening? So I think those elements, or those metrics, if you track, I don't see that changing for the next few years, right? We're seeing a massive growth, the capex cycle in India coming back. I mean, you just last few months, every kind of new industry is getting created here. Semiconductor manufacturing, etc., etc. All of those things will do what? Will create jobs. Will get money into the hands of many young people who will then want to buy houses.
Right.
So it's a derivative of all of those factors. And if you put those things in perspective, why won't a guy or girl, a young professional who's earning money, not go and buy a house? It's the first thing anyone does, right?
Right.
So the demand for housing is only going to go up from here. And similarly for office, the way we see it is, people keep telling us the same thing, that people work from home. Are you worried, etc.? My simple question is, if anyone wants to go back to the office, they want a world-class office. They do not want to go back to just a empty glass building
Right.
with a table and chair. They want to have an experience,
Right.
and that's what the larger groups like ourselves, like RMZ, what we're doing, right? We're creating social experiences when you go to office. Now, if you're doing that, the tenants are going to come and say, please, I'm not going to give up my lease under any circumstances. Please build more. And I'm going to keep building. So, long story and a long answer to your question, but that's how I see it pan out for the next 5 to 7 years. And I don't see why it'll change.
Perfect. I think with that, Avinash, that brings us to the close of our conversation today. But I want to say thank you so much for your time. And if you will permit me a small pun, I think
Sure.
you have definitely had us invested in this conversation, and I'm sure our listeners will be extremely invested in the conversation when they hear it.
That's great. Thank you so much, guys, for having me on your chat. I think this has been really exciting, and wish you best of luck. And happy to have any other questions or follow-ups if you or your listeners have. So thank you.
If you enjoyed this conversation, be sure to follow Concrete Conversations on Instagram to know more about upcoming episodes and for some behind the scenes content.
For more deep dives into the world of Indian real estate, stay tuned for more Concrete Conversations.